It is time for your February market update. We are already a month into 2023 and I wanted to let you guys know what's going on in the real estate market. What I thought I would do today is just run through some sheets that I look at every month. So every month we track data that comes out of the Northwest Multiple Listing Service. We look at all the data, input the numbers into our own spreadsheets where we track it for Southeast King County and for East Pierce County. So today what I thought I'd do is just walk you through each of these sheets and show you what I am seeing. So this first chart is looking at the number of new listings, excuse me, number of new listings that are in the market in Southeast King County. As you can see here, this red dot here is the number of new listings in January. We are significantly lower than typical, right? So there was 326 new listings that came on the market. So I asked myself, why? Like, why is that? And there's a couple reasons that I wrote down here. First is sellers are unsure about the market, right? There's been a lot of negative news, right, surrounding the real estate market this last 6 months as we've gone through the end of 2022. It was slow. It was a quiet real estate market. I've been doing this for 20 years, and we hadn't seen rates hit into the mid sevens like they did for a long time. So that put a lot of buyers on pause. People just kind of not sure what they're going to do. The other reason the number of new listings is low is there's a lot of people who are sitting in their home with a 2% mortgage or a 3% mortgage. So the option of selling the house and buying a little bigger house becomes a lot more expensive, right? Because they're going to get rid of their 2% mortgage and get a 6% mortgage. That move just became more expensive. So we're seeing a lot of folks are staying in their home, remodeling, adding on a bedroom, doing some things where they can keep their lower interest on their mortgage, right? So that's also keeping the inventory. I expect that'll keep the inventory level down here. Actually, probably for the next couple of years, we'll continue to see that. And the other reason that I wrote down is that the clients haven't figured out that it's okay to buy and sell in the same market timing, right? So yes, prices have come down from where they were, a year ago, but that means the house that you're buying, the price has come down as well. So yes, you may be selling your home for less than what you thought you were going to last year, but you're also going to be buying for less. So it's okay to move in same market timing, right? You're buying and selling. You're not, selling low and buying high, right? You're doing it in the same market timing. So that's kind of the update on the number of new listings. This next chart here, we'll dive into, is the total active listings. How many homes are on the market in Southeast King County? So you can see right now we're at 424 in January, okay? And if you look here, the last couple years have been extremely low. So we feel like we're in this market where there's so many homes in the market, right? But if you look at the data, we're kind of mid-range, right? And when you look at, last year was record low. We've never seen inventory that low. Last January, we were at 140. Year before that, 175. So these last two Januaries have been extremely low. Right now, we're at 424, which is actually the exact same as we had in 2020 of 424. 2019 was 747, 18, 321, 478, 587. So we're getting back into a normal real estate market, you guys. So don't freak out. The sky isn't falling. We're just getting back into a normal real estate market. So yeah, that's the story with the active listings. Great news for you, right? If you're wanting to buy in this market as well, right? The last couple of years has been extremely difficult, right, to try and find something to buy. So definitely more options. One thing we can talk about kind of that ties in with that is contingent offers. We haven't done, I bet you we've done 4 contingent offers in the last 3 years. That's just a guess. Right now, I think we have 3 contingent offers going now. Right? So something that we've done very little of over the last several years, where you have to sell your home in order to buy your next home, right? That's been very difficult to do. Right now, more options, right? So that's definitely a great thing for somebody who is needing to make a move to a bigger house or to a smaller house, right? Whether you're needing to downsize or upsize, being able to make that contingent offer is definitely a good thing. The next one I want to look at here is the number of pending sales. Okay. So what we see here is the pending sales, we're at 434 in January. It's the lowest of the numbers here of the last 6 or 7 years on this chart. But that is a direct correlation to the number of new listings that came on the market in January, right? So in January, we saw the number of new listings the lowest it's been, right? Well, then it makes sense that the number of pending sales would be low as well, because the new listings is the inventory that the buyers are going to get excited about, right? The homes that have been sitting in the market for 60, 90 days, buyers aren't excited about those, right? But the number of new listings that come on the market, that's new inventory for a buyer to choose from. So that's why we're seeing the pending sales down. One thing I want to make sure to point out though, right, on this chart, you can see where we were at. This blue line here is last year. You can see our pending sales really from, when did it start here? We had the lowest number of pending sales for the last, what do you have on here, 6 years on this chart. From May to the rest of last year, every month was lower than any previous year, okay? But the thing I want to point out too is we went from 286 in December to 434 in January, right? So we had a significant jump. Now we normally see a jump, right, comparing December to January, but looking at previous years, you know, most years are up, say, 40 to 50 sales more in January than in December. Well, this year we went from 286 to 434, right? So, you know, 150 more sales in January than December. So buyers are coming back into the market, right? That's definitely a feature of, you know, the interest rates, right? Of seeing rates that were in the 7s there in the fourth quarter last year for a little while, definitely high 6s, to now into the low to mid 6s, right? So that's bringing buyers back into the market. The other thing I wanted to show you too, I'm kind of a data guy, right? We like to look at all this data. This is for Southeast King County, the percent of homes that sold in the first week on the market, okay? So last week, and this is done by week, so last week, 47% of the homes that came on the market sold in the first week, okay? During like third and fourth quarter last year, we were seeing numbers in the, you know, 10 to 20% range versus 47%. The last time we saw 47% was the week of May 6th, right? So remember May, because we're going to talk about that here in a second when we talk about prices. So the last time we saw the market activity like that was in May. So we're definitely, that's a sign to me that we're seeing buyers enter back into the marketplace. The next chart I want to look at here is going to be prices, median sales price, okay? So you can see each one of these lines represents the prices for each year, okay? You can see where we're at here. We're basically right where we were a year ago, okay? But here's what you got to take in mind. Look at where we're at compared to all the previous years, okay? So last year, prices started at $635 in January. By April, when they peaked, okay, they were at $750. That's a $115,000 increase in the median home price in 90 days. $115,000 in 90 days from $635 to $750, right? Big jump. So you can't have that much growth without giving some back, right? So we're starting this year within $50. So last year we were at $635,000. As of January, we're at $634,950. So prices are basically the same point they were last year. We saw that big run up, we had to give that back, right? But let's look at where we're at compared to January of 2021. We're up $120,000. January of 2020, we've gone up $153,000. January of 2019, we've gone up $201,000, right, in 4 years, right? So we have to remember big picture, right? It's not normal for homes to go up $130,000 in 90 days, right? Like we can't expect that that's the normal, right? So, you know, that's the update on pricing. So that's an update for you. A lot going on. Like I said, the fourth quarter, third and fourth quarter of last year was interesting, right? Been doing this 20 years. We hadn't seen a shift like that happened so fast as a result of the rates, you know, taking a big jump like we saw last year. But we have definitely seen that the market is back active. We've put together about 10 transactions in the last 30 days, just getting this year off to a great start, helping our clients. We've been able to negotiate closing costs for our buyers, maybe some delayed possessions or some rent backs. Lots of things we've been doing to help our clients win in this market. So let us know how we can help you or any of your friends or family We are happy to help however we can. Have a great day. We'll talk to you soon.